Let's move on. Karnataka Bank is the first management on the show today. The bank actually reported a sharp rise in gross NPAs and a much faster rise in net NPA. So asset quality is definitely under pressure. Loan growth has not translated into net interest margin improvement either. It's peculiar because this comes at a time when a lot of the other banks are posting improvement in asset quality and loan growth. So let's find out what's going wrong. Srikrishnan H, the MD and CEO of Karnataka Bank, joins us now to talk about that. Mr. Srikrishnan, thanks a lot for joining in. There is weakness in your asset quality. So first, if you can help us with the slippages number. What was it in this quarter? Has it gone up compared to the preceding quarters? And what is the outlook as we move into, Q4?
Thanks for this opportunity. Good morning. I think, we need to put things in perspective. The total profits, which is the PAT for the bank, has increased substantially, which is about almost a 25% growth on a year-on-year basis. So we are actually clocking a 9-month all-time high of 1,036 crores. So this is something that you need to keep it in the backdrop while we are looking at the other numbers, because this is a legacy bank and the new management has taken over. And obviously, there are lots of changes that we are making, and including in the overall asset book. The asset book, as you're aware, had a restructured portfolio post-COVID of almost 4,500 crores. We had brought it down to less than 2,000 crores. And currently, as I speak to you, this quarter end is about 1,800 crores. The slippages are about 0.8%, which is higher than the last quarter or even perhaps earlier. But this is primarily from the restructured advances book, which is all fully provided for. The other reason is very simple, that a lot of these restructured assets from standard are either getting into NPA or getting regularized. So this is a constant process, very continuous engagement that we are having with all our customers who are in this kind of, let's say, stress. And this is all post-COVID. And we will be in a position to kind of really clean it up. The overall number compared to the 70,000 crores of assets that we have, and we've grown the loan book this time substantially at 18.5% on a year-on-year basis. And this again stands at close to 70,000 crores, 69,740 crores. So which means the percentage
Mr.
of...
Srikrishnan, yeah, you said 0.8%, right? So just can you quantify that for me? How much is the absolute amount of slippages compared to, say, last quarter? And also, which are the sectors or segments where you saw higher slippages? Yeah, please go ahead.
So the total slippages amount is 255 crores, which is, additionally from the restructured portfolio. Otherwise, the NPA levels, we are actually reduced. The net NPA has come down by about 10 basis points. And the gross NPA has also come down by about, 8 basis points. Overall, the book is steady. So this is a historical book, and there is also the new book. The new book is growing. The historical book, we are compressing. Now, on the overall provisions, we are at 80% right now. We were at 83, and we are provided for all of this slippages that are happening. And last but not the least, including our technical write-off, we are still closer to 60%, which is also a very healthy, steady state of the book.
All right. Hi, Mr. Srikrishnan. Good morning. Nigel on this side. It's a couple of numbers. The gross NPAs, as I see it, of the last quarter is around 3.6%. And the net NPAs is around 1.55%. What is the outlook out here? How do these numbers shape up?
So the outlook is that in the next 2 quarters, we should be aiming to get the gross closer to the 3% range and the net NPA to the 1.2, 1.25 range.
Got it. All right. And what about deposits? Deposit growth has been a little bit weakish. How do you see this number moving up? If you could give us a broad growth outline.
This is a common factor across all the banks this quarter, as you know. Low-cost deposits.
Right. But sir, you will have to innovate and come up with something new, right, to try to shore up your deposits. So do you have a plan in place, and what's the outlook? Go ahead.
Of course. So we have a chief product officer in place. As of yesterday, we have a chief information officer also who has joined. And the digital bank that we are setting up to acquire deposits through collaborations, through fintech collaborations, etc., is going on in full swing. So the branch franchise is also going on in full swing. So there is an outbound sales team that we have deployed, which is more than about 500 feet on street and plus 250 sales officers from the bank. We are also making sure that the incentivization plan for them to acquire new accounts and also cross-sell and upsell for the existing to bank accounts are being made. So with all this, I think that the outlook is very, very positive. And more importantly, I think that the growth in advances led by the MSME and the SME. And the second is rural and agri is also growing. Last is that on the deposit side, the branches are really kicking in right now. All the branches have been turned into a sale.
Mr. Srikrishnan, good morning. Prashant here. You got a board meet on Saturday for Fundraise. Could you tell us more about that?
Yeah, we had a board meeting yesterday, and we have notified that we have another one on 27th. You are aware that the board had approved a 1,500 crore capital raise. Out of that, 800 was already done. We are looking at options for the balance 700 to be raised, and which is why the board is meeting. We did not want to do it yesterday along with the quarterly results. We're also happy to announce that we have appointed one more additional independent director who comes with a very, very professional background. We have strengthened the board. This will be in lieu of one of the erstwhile directors whose term is ending. And
which way are you leaning, sir, in terms of route for the fundraise?
So we will be looking at a combination, which will be something that we will declare on the 27th.
Okay. Can you just give us one number on the loan growth by the end of the fiscal and FY25? What is the expectation? What would the loan growth be?
18% is what I have stated, and we continue to grow at the same 18% for this exit of March, and also the 3-year outlook that I have given, and we stay by that.
All right. Well, thanks a lot for joining in, and appreciate your time here on CNBC-TV18. That's Karnataka Bank. 18% loan growth is what they're looking at by the end of the fiscal.